Hello, a big warm welcome to everyone to tonight's webinar on making tax digital, specifically for landlords tonight. I'm Matt Hustwit, I'm Head of Business Development for DJH, and I will be your host for tonight. The digital transformation of the UK tax system is reaching this critical milestone, and making tax digital is part of HMRC's initiative to modernise tax administration and provide a more real-time view of tax liabilities. Today, our expert team will guide you through all that you need to know, and I will introduce them now for you. We've got a stellar lineup in the property world for you tonight. So you're going to hear from Jonathan Jones, first of all, who's a property tax specialist from our Chester office. We've got Claire Howarth, who's specialist in property accounting and tax from our Leeds office, and Ryan Alderson, who's head of our cloud advisory and making tax digital for the group. Just very quickly, and for those who are new to DJH, who are not currently working with us, I just wanted to give a brief summary of who we are and how we can help. We're a top 40 accountancy practice. We specialise in building relationships with our clients and providing trusted advice. 16 offices operating across the UK and Ireland, giving national support but with a local knowledge and flavour. Full service practice, here to help at every stage of your business journey. And our in-house specialist advisory services are all designed to support you and your business through its journey. So, why is tonight important? As mentioned, this is a major and important change to how self-employed income, including rental income, is reported. And many of you here tonight will be in scope for this from April 2026. You're not alone. There's over 2 million self-employed taxpayers who are affected, with around 1 million being landlords. So it covers many trades and professions. This evening, as I said earlier, we will be concentrating on landlords. There's just a small bit of housekeeping for us, just to let you know that we are recording tonight's session. Don't need to worry, you aren't visible. It's only the speakers that are visible on the recording. And we have muted all of the microphones. But we want you to be able to ask any questions or any burning topics that you need to get in touch with us. So with this in mind, if you have a question, if you post it onto the Q&A section of the webinar, there'll be a time slot at the end of today's presentation for us to get through as many of those as we can. That's it from me. I'm delighted to now pass you over to Jonathan, who can get tonight's webinar underway.
Okay, yeah, thanks, Matt. A little technical problem with the slides.
Is it working?
Okay, bear with me, guys. Yeah, not a great start. No, I don't seem to be able to.
If you want to give me a nod, Jonathan, when you want the slide changing, I can do that for you.
Yep, I see. Ah, there we go. That looks a bit better. Ah, sorry, guys. So why making tax digital? Now, what HMRC will be willing to tell you is that it's to do with modernizing the tax system. They're providing a digital tax form, a tax platform that provides real-time tax information. It allows taxpayers to manage their affairs in a better manner. It improves taxpayers' efficiency and experience, but it will also improve the efficiency in HMRC's processes and the accuracy of taxpayers' books and records. Books and records. What do I mean by that? Now, what HMRC will not be telling you that it's to close the tax gap. Now, the tax gap is the difference between the tax that should have been paid and declared and the tax that was actually declared and paid. Now, that shortfall is £47 billion. And HMRC reckon that 60% of that shortfall relates to small businesses, that they should be keeping better books and records. So making tax digital could be seen as a way of making taxpayers keep better books and records in a digital format that allows HMRC to inquire into their affairs, close the tax gap, and collect more taxes. Next slide, please, Matt. Okay, so who does MTD apply to? It applies if you hit certain thresholds. So MTD applies if your gross qualifying combined income exceeds a certain threshold. And what do I mean by gross? So gross is before expenses. So many landlords will have a letting agent. Your gross rental income will be £1,000. The letting agent will deduct, say, £100, and £900 will be paid into your bank account. It's not the £900 that's being paid into your bank account that's your gross income. It's the £1,000 qualifying income. So qualifying income is self-employment income, income from UK property, and it's income from foreign property. No other sources of income. So your gross qualifying combined income, if that exceeds £50,000 in the tax year 24-25, then you will be brought into Making Tax Digital from the beginning of April 26. If your gross qualifying combined income exceeds £30,000 in your 25-26 tax return, then you will be brought into Making Tax Digital from the beginning of April 27. And if your gross qualifying combined income exceeds £20,000 in your 26-27 tax return, then you will be brought into Making Tax Digital from the beginning of April 26. So what incomes do not apply to Making Tax Digital? So we spoke about qualified income being your self-employment, income from UK property, and income from foreign property. It does not include any employment or pension income. It does not include any income from partnerships. It does not include dividend income, and it does not include rental income within a limited company. So common landlord scenarios. So you will be brought into Making Tax Digital from April 26 if your earnings exceed £50,000 solely from UK properties, or you earn £40,000 from UK properties and £12,000 from self-employment. 40 plus 12 equals 52, exceeding the £50,000 limit. You own 50% of a privately owned UK rental portfolio with an income of over £100,000. So your share is over £50,000. You were brought into Making Tax Digital. And you own 50% of a rental portfolio that has rental income of more than £50,000. So your share is 25. You have £15,000 from foreign property and £12,000 from self-employment. So when you add all of those up together, that's 52. Again, you're over the £50,000 threshold. You'll be brought into Making Tax Digital. Next slide, Matt. So what changes under Making Tax Digital? Well, firstly, you'll be required to keep digital records on approved software, whether that be an Excel spreadsheet with bridging software, that could be Xero, it could be Free Agent, Sage, QuickBooks. There are many approved softwares out there. You'll also be required to make quarterly updates for each relevant income source. And what do I mean by that? So individual submissions will be made for each distinct trade, a submission for all your UK property, and a submission for all your foreign property. So, for example, if we had 2 trades, 2 UK properties, and 2 foreign properties, we would have to make a submission for trade number 1, a submission for trade number 2, a submission for all of your UK property, and a submission for all of your foreign property. So that's 4 submissions in a quarter. And you'll have to make a final declaration that's akin to a self-assessment tax return. So what is a quarterly update? Well, it is a year-to-date summary. It is income and expense totals, and it's a way of HMRC to track your position during the year. Now, what it's not a tax return, it's not a tax bill, and it's not expected to include non-relevant income. So that's employment income, pension income, dividend income, partnership income, and income from a property company. Okay, Matt. So quarterly update deadlines. So they'll be working on a calendar quarter or a tax period. For most people, that will be a calendar quarter. The first quarter being the 30th of June, and an MTD submission will need to be made by the 7th of August. The next quarter would be the 30th of September, and that would need to be submitted by the 7th of November. The quarter ended 31st of October, of December, would need to be submitted by the 7th of February, and the quarter ended March would need to be submitted by the 7th of May. Now, think of it from my perspective. There are only so many accountants and so many days in the year. I really stress that I will not be able to make all the submissions on the final day. So I'm really asking, help me help you by keeping your books and records up to date little and often. Next slide. So what does HMRC? HMRC will only see your total income. They will see